and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Barring the Japanese markets, it's a fairly okay-ish start for the Asian screen.
Participants generally pointed to risks to both sides of the committee's dual mandate.
We have attempted self-regulation, but that has not really worked.
It's 25,160 is the 61.8% retracement.
It's in the too premature stage and it's very difficult to talk about it.
25,114, 55,970 is where the Nifty Bank is at.
Sometimes these deals need to get out of the way, and then we'll have to see what happens from here on.
The management confirmed to us the fact that it was a punching error that led to these extraordinary volumes.
Gains continue for our market. Sixth up, day of gains for the Nifty and the Sensex.
If you really look at my statement, where is that in a calibrated manner?
They are willing to sacrifice revenues, they are willing to sacrifice free markets in order to protect what they think is the lowest rung of the middle class.
It was turning out to be a good session, but then the expiry-related volatility kicking in, but still holding on to some bit of gains is the benchmark index.
Okay, that's a day so far. Markets, another day of gain, sixth day running. So it's kind of almost cancelled out the 6-day down drift that the market has had before we started this up move, which is now 6 days old. 25,120, and it's a little bit closer to that important retracement level, about 40-odd points. Let's see if you can cover that distance over the next 60 minutes. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Rima here. Nigel is joining us from the newsroom. Four guys, good afternoon.
Hi. Afternoon. So it's a full foursome house today. So looking good. But I guess, yeah, absolutely. The market's been good, guys. But more about large caps today on the screen than the mid caps.
Indeed, and it's been a good week so far, right? 2% up on the Nifty, 2.5% on the mid-cap index. It's just that the mid-cap index today in the second half has faltered a bit and slipped close to about 350 points from the day's high.
That's right, and it's good to see, right? After a while, the Indian markets have started outperforming. We last couple of weeks, or last month, or even last year, we have been underperforming. So good to see some kind of outperformance, and just to clear the air with regard to the queries that we're receiving on Prashant's birthday treat. It did not happen, so we look forward to the weekend. Prashant, just want to clarify, because as we started the show itself, they said, what about yesterday's party? I said it didn't happen. No worries.
All
we look forward
good
to the
things
weekend.
happen by the weekend. Yeah, all good things happen by the weekend.
Yeah, but let's get straight to the market action.
All right. Well, just a quick... actually, before we get to market action, let me just run you through what's lined up here, right? Next 60 minutes in terms of the lineup. So you'll hear from, of course, market experts and technical trades coming up first up. But markets, of course, the big story is the capital market story. Big cuts, 5, 6, 7%, depending on who you track. SEBI chairman confirming a CNBC-TV18 story from earlier, which is that they're looking to increase the tenure of equity derivatives. Basically, the weekly contract, which is the bulk of the revenue on the option side for capital market platforms, that may go. So we'll talk about that in greater detail in a bit. The group of ministers has accepted the centre's proposal to scrap the 12 and 28% GST slabs in favour of a two-rate structure. So Timsy joins us on that in just a bit. FMCG, consumer discretionary stocks are surging off day's lows. Aurobindo Pharma is the other one, right? Acquisition, we had a detailed chat with the management. Stocks flat. And that purchase, that big $5 billion purchase, perhaps is something which may see the light of day, although they said that they are in a NDA period, so no real details at this point. Markets looking pretty good. Bank Nifty is up about 1/3%. Mid-cap index, though, is slightly lower. So as Rima said, today more about large caps than anything else. And as I said, we'll see another 40 points, and then you're at that 61.8% retracement of the entire fall. So we'll see if that is a resistance, if the market's able to get its head above that level. It's an important one, which we will track. Rima.
Well, Aurobindo Pharma is flat, but the rest of the pharmaceutical stocks are higher. So look at Dr. Reddy's, Cipla, both up close to about 2.5%. Bajaj Finance, FinServ seeing buying. Stocks are gaining close to about 1.5%. Big boy Reliance Industries is contributing on the way up with a gain of over 1%. Remember, AGM is next week on Friday. That's when you typically get big bang announcements, the outlook for the next couple of years. In the banking pack, it's ICICI Bank, which deserves a mention as the stock inches up. On the way down, a couple of two-wheeler names are weak in trade. Bajaj Auto, Hero MotoCorp down, Coal India 1.5% lower, and Eternal has come in for some amount of profit booking.
Yeah, so I mean, lots of individual movers and shakers. On the way up today, you don't have too many gainers to speak of in the mid-cap market, but there are outliers. I mean, we've been speaking of some of them. For instance, this name Jupiter now across global markets. That's the dollar index. Global cues, basically nothing really is moving. Neither the dollar, most of the European markets are flat, and Wall Street futures also flat, waiting for that all-important Jackson Hole summit that kicks off later on Friday. Nigel?
Well, that's right. Well, let's go across to Ashish Kayal, actually, who joins us today. Hi, Ashish. What are you making of today's trading action? The markets, it appears we are facing resistance at 25,150 odd, but exciting times with the weekly expiry on the anvil. Tell us more.
Hi, Nigel. Afternoon to you and all the viewers as well. If you look at the markets, if we start from the weekly time frame chart, we can see that this is the week after nearly around 8 weeks. Prices are managing to close above the prior week's high. I mean, it's still Thursday, but I'm assuming that the prior week high was around 24,702 and we will close above that. That's an assumption. So it will be after 8 weeks, we will close that. So that gives a positive tone. On the daily time frame, we can clearly see the gap which was created on 18th of August. That gap has been sustained and we have been inching higher constantly. So the overall undertone remains on the buy side. Use any kind of dips as a buying opportunity, aiming for the move towards 25,300 and eventually higher. I think the contribution can start coming in from the IT space. We started seeing Infosys giving nearly 3% rise yesterday after a long time, 3 to 4% it was up. And I think the IT sector can start, participating in the rally. And we are seeing a very classic sector rotation that is happening. It started with banking stocks, Bank Nifty touching lifetime highs for the first time, then from the banking, the auto, and now IT trying to catch up. So I think the overall undertone remains bullish for the overall market.
Okay, and what about stocks, Ashish?
From individual stock space, the topic is going to be emphasis. We can clearly see the stock has shown a very classic reversal from 2650 levels, currently at around 2880. The undertone is positive over here. We can expect a target of 3040 on upside in emphasis. One can maintain a stop loss of 2790 on the downside. And the next stock is SBI Life. It has been consolidating since July onwards in a range. But today it has managed to give a breakout of that range and sustaining there. Volumes have picked up. So it looks like a genuine breakout on the upside. One can maintain a stop loss of 1825, aiming for the target of 1980 on the upside.
Okay. All right, Ashish, got that. Thank you very much for that. Well, let's straight away hit the top story of the day, and that is the latest comment coming in from the regulator on what the thinking now is with respect to any further controls on the equity options market, specifically when overall futures and options, but more specifically options, and on the weekly product. Our colleagues, actually, Yash was there, even Lata was there at an event where the SEBI chairman was speaking, and they asked the SEBI chief whether there is any thought of changing the tenure of the weekly expiry, the one product per week that is allowed at present. Hear out what the SEBI chief had to say.
See, improving the tenure really means that, whether we can sort of have longer term, more longer term derivatives. But all this is to be done in consultation. As I said, that in what form, how, we'll have the consultations. And
we'll have a consultation paper
coming? Yes. Nothing will be on...
By when will the consultation take?
No, I mean, I can't
is
give
it
you
in a month, in a week?
No, I can't tell you that, but that's the thinking process we have.
But your preference is for a longer. Your preference is for a longer.
Yes, I mean, that is qualitatively we have to see, but we have to calibrate it. So if you really look at my statement, where I said in a calibrated manner.
Okay, so the preference is for a longer tenure of expiry, longer than a week. But what is the definition of longer? Is it fortnightly? Is it something else? 10 days? I mean, what are they looking at? That has not yet been spelled out. And as the SEBI chief says, a consultation process is still underway. Sudeep Bandyopadhyay is with us to take stock of today's market action in this afternoon. Sudeep, let's start right there. Clearly the overhang is not out of the way. It's playing out once again on stocks like BSE, Angel, more on Angel, less on names like Motilal Oswal, etc. But what's your sense? Very clearly, something is going to change. We don't know in what respect. Would it really be, as damaging for BSE as what the stock price is indicating this afternoon?
Well, Subi, I think you're absolutely right. Something is going to change. I think the entire tenure of the regulator is very clear. They want to curb speculation. And they are taking all possible steps to do that. They definitely want FNO to remain, but they want to ensure that the huge amount of volatility and unnecessarily speculative trading which happens on a continuous basis, that volume to come down. So if you elongate the tenure of the contract, obviously the number of contracts comes down, so the volume of trading comes down, and obviously it does impact brokers who have significant FNO volumes. Of course, Angel does get impacted. Similarly, many other brokers who have significant FNO presence will get impacted. BSE being the exchange which kind of, chartered its revival through these contracts will have a challenge, obviously. And as far as pricing is concerned, I think these stocks are priced to perfection. So a little bit of bad news also is affecting them severely.
But Sudeep, say, for the sake of argument, BSE says right now it's 22% of its 52-week high. So is disruption, this level of disruption, is it already in the price, or could there be further downsides, you think, if indeed this, as and when and if it were to come through? Though the exchange, when we spoke to BSE last, they were quite dismissive, and they said that, they're looking at a lot of other ways of shoring up business, and they want to increase their participation in the cash market, for instance. So again, from a stock perspective, it's 22% off the peak. Is it still an avoid for you?
Well, I think, if you're really looking at a long-term view, let's say 3 to 5 years, I think BSE definitely is a good buy. It's a market infrastructure institution. It will do well. Once NSE gets listed, it will get listed on BSE. And obviously, there will be significant trading volumes of NSE, which will be generated in BSE. So there are positives from the long term, but in the short term, undoubtedly, there are headwinds because of the regulator curbing the FNO activity in multiple ways. They are trying to come down on that. So yes, there will be challenges for BSE. Yes, they're absolutely right. They will try to figure out other alternate streams of revenues, including volumes in cash market. But I'll be a little careful there because that BSE has been trying for last 20 years. And it hasn't happened really successfully. It doesn't mean that it won't happen in the future, but I'll take that with a pinch of salt at this stage. Today, the entire valuation, the aura is built on this, rapid scale up in FNO as far as BSE is concerned, and that getting punctured by the regulator is definitely a cause for concern. So I will definitely be cautious. I'll not, be dismissive about this change which is coming and which is imminent.
Okay, don't be dismissive about the change, especially if you see this in conjunction. Yesterday, the news about prohibiting online gaming, right? I mean, the real money gaming, online gaming. So the common regulatory philosophy that seems to be emerging now is that protect the small, the common man, right? Curb this excessive speculation, protect them. And that seems to be the overarching theme that's emerging. But let's move on then to the other big story. The group of ministers has accepted the proposal to move to 5% and 18% slab structure proposed by the centre. This is on GST. Tim C joins in with the details.
Well, that's right. The ball now seems to be set rolling on a simplified GST structure. The next generation GST reforms, which the Prime Minister spoke about in his Independence Day speech from the ramparts of Red Fort, that new GST framework could be 5%, 18% and 40%. That is what sources indicated. And that's what we heard from the convener of the group of ministers on rate rationalization and other members such as Suresh Khanna and West Bengal Finance Minister Chandrima Bhattacharya. They said that all the states in the GOM are in favor of the proposal to reduce the slabs and bring it down to 5%, 18% and 40%, provided there is a calculation that centre comes up with as to what will be the estimated revenue loss and how will the centre be able to make this up. Also, the states in the GOM meeting did suggest that as they are in acceptance of the proposal, the proposal can only go through once in the council there is a detailed presentation And yes, West Bengal, to be precise, made a plea that there should be an amendment in the Schedule 9 where they want that an additional levy beyond 40% should be available, and that should be levied to overcome the losses if in any case in future, because now compensation is ceasing. So let's see what happens finally in the GST Council meeting. Now the ball is for the GST Council to deliberate upon these proposals. Whether 5%, 18% and 40% will be a reality or not, whether states will compromise on their revenue loss, something that we have to wait and watch for the council to approve. Back to you.
जो केंद्र सरकार के प्रस्ताव हैं 2 स्लैब को समाप्त करने के लिए, उस प्रस्ताव पर हम लोगों ने विचार किया और समर्थन दिया है और हम लोग इसको रिकमेंडेशन दिए हैं। अब जीएसटी काउंसिल इसको फैसला लेगा।
क्या रिकमेंडेशन है सर?
हम लोगों ने जीएम के तरफ से स्पष्ट तौर पर ये निर्णय लिया है कि जो गवर्नमेंट ऑफ इंडिया के 2 प्रस्ताव आए हैं, स्लैब 12% टैक्स को खत्म करने के लिए और 28% के टैक्स को समाप्त करने के लिए, उस प्रस्ताव का समर्थन किया।
Sudeep, that's the other hot topic then, GST rationalization, these Gen Next reforms. Maruti is up 10.5% this week. Nestle, HUL have corrected a bit, but still up 7-8%. You know, this whole pro-consumer trade is now gaining traction. Look at two-wheeler names like Hero MotoCorp, Bajaj Auto, also up 6-8% for the week. I'm not talking about today, in response to this news. Do you think there is, I mean, if you have to play this GST rationalization theme, you go with the assumption that it's coming, which stock would you bet on?
Well, I'm looking at cement, continuing to looking at cement. In fact, we've been recommending cement for some time, and this GST rationalization does help further cement industry. The 28% should become much lower, and that definitely will reduce the cost of per bag to the consumers, which should spur further demand. So this is one industry which we are absolutely positive on. So one can look at a company like an Ultratech or even ACC, Ambuja. See, all these companies will benefit out of that. FMCG, of course, and the valuations have already started moving up. Consumer durable is another space where we have been positive because of the festive season coming in now, kicking in very soon, as well as monsoon being good and interest rates coming down. On top of that, we had this government reducing the income tax for common man, and that should benefit consumer durables. So we were anyway, prepping up for consumer durables, starting to do well, and now this GST benefit will further, encourage consumer durable segment. So one can look at that. We have seen what kind of demand, shortage the air conditioner industry was facing. I think things will start looking up very soon.
Okay, all right. Hi, Sudeep. Good to see you in, Sudeep. What's the view on Nazara Tech? That's one of the big movers from the low point of the day. I think it's up close to around 10%. Now, there is a risk to the investment that they have made into a company that's into real money gaming. But that risk could be, to the tune of around 800 crores or thereabouts that they've already put, and they have a due another 200, 250 crores approximately. The market capitalization is close to around 11,000 crores. Now, the street may be wanting to look ahead of this because it could be a one-time hit that they're going to take. It's not an the business model itself is not totally dependent on this. Would you look beyond this, and would you look at the stock at around 1,200 rupees after it's corrected close to around 15% from the top?
Nigel, we have to look beyond this because the way the environment is shaping up, I think, banning of online gaming is real and it's going to happen. It's just a matter of time before it, goes through all the hoops. But having said that, you're absolutely right. They have to write off this Pokerbazi investment, or you have to take a major hit on that Pokerbazi investment. And that's about 800 crore. But I think beyond that, I think the overall environment, as far as their products and services are concerned, suite of products and services are concerned, in India, I think that will have a lesser traction because, their software and their other services will not be that relevant because online gaming is kind of going to go away as far as India is concerned. But But I'll also mention here that they have been focused on global markets as well. And a significant part of their revenue and business is now in the global markets. So I'll wait and watch how quickly they can ramp up further the global business as opposed to the domestic business, because I think there will be challenges in the domestic part. And as far as the price is concerned and the valuation at this stage is concerned, I think I'll wait and watch. I don't think I will rush to buy. Let things settle down a bit. Even if by that time it moves up slightly higher, I will rather buy then than now, buy now, because I think too many moving parts at this stage as far as this industry is concerned.
Okay, all right. Sudeep, we'll leave it there for today. Thank you very much for joining us, and good speaking with you here on CNBC TV18. We'll take a break. We are back with Rajesh Kothari from Alpha Accurate Advisors on the other side. And we talk some sectors, some stocks that Rajesh likes. Stay with us. Rajesh Kothari is now joining us. He's Managing Director at Alpha Accurate Advisors. Rajesh, good afternoon. Great to have you with us here. Thanks for joining us. I want to start with, we'll talk about what you like and what you want. We have a sense of that, and some of them are interesting names which we want to revisit. But I want to ask you about not a new name, but something I've not asked you before. Tejas Network. I don't know if you've, it's in that sort of, it's a IP/manufacturing kind of name, Tata Group company, of course, on the telecom side. Have you looked at it, Rajesh? Stock's up about 6-7%. Yesterday, there was a long-form piece in the Ken, the publication, talking about what's gone wrong and, the BSNL opportunity overhang, etc. It's been talked about quite a bit, but stocks come off very, very sharply. I don't know if you've looked at it in any detail at any point.
Hi. So, we have looked at this company and, in last, it is a very old company. So, a company has a long history of last 3, 4, 5 years in particular. A lot of developments have happened post the change in management. And of course, they are playing the global. I think it's a more of a play on the global infrastructure kind of a capabilities. Now, what happens when you play such kind of a global infrastructure capabilities? Please remember, these are not very high ROE, ROC businesses. At times it's like kind of a commodity business. You need to enter to make sure that you get the PQ. So you need to execute bulk, huge work, probably with lesser margin, at times lesser profitability, so that you get the future orders in the future bids. So currently we do not have any, holding in this company. So, I have a very, I would say, limited view right now.
Rajesh, so in the last 1 month, what have you been doing with your portfolio? The last time we spoke, you were telling us how you added or increased your exposure to specialty chemicals. EMS companies were on your radar and you were adding on to that, building materials, CDMO. These were some themes that we discussed last time. What else? Incrementally in the last 1 month, what changes have you made?
If you look at market, I think there are many, most of the players, they are talking about that the first quarter FY26 results season is over. And generally people say it's a kind of a muted number, 8-9% kind of a profit growth. If you look at the Nifty 500 companies, if you look at the Nifty, it is only about 6%, 7% growth. If you look at Nifty 500, it is about 9-10% kind of a net profit growth. But I think it's very important to look a little bit deep dive. And if you deep dive, then you will realize that 200 out of 500 companies, roughly about 200 companies, they have reported 15% plus EBITDA growth. So as I was saying, and I continue to maintain that from last 12, 18 months, I've been saying that it is a more of a stock selection, more of a stock specific market. It is a bottom up approach. And there are enough number of companies which are delivering reasonably strong growth. If I look at my own portfolio, so we have a 2 portfolio, correct? AAA IOP, which is multi-cap. It is, delivered 20% plus net profit growth. And if you look at our AAA budding beast, which is a more mid and small, it is also reported 24% kind of a profit growth. And both these portfolios are reported, 18% plus revenue growth. So it means that there are enough number of companies which are delivering very strong growth. Primarily, the winners are specialty chemical, capital goods, auto ancillary companies, EMS plays, good hospitals, retail businesses, and CDMO. And if you look at most of our portfolio, they are a little bit more weighted, towards these names. Of course, the banking, primarily the large banks, IT and consumer, they are the draggers from the market perspective. But the good part is probably the worst is over in each of these 3 buckets. And hence, from the market perspective, I think we have a very good, I would say reasonable good valuation with a upwards of earnings or trajectory for the overall market. And the moment you do a little bit more deep dive, there are enough pockets where you can make 20% plus earnings growth over the next 2 years.
Okay, interesting. Rajesh, hi, good afternoon. Good to have you on. I was just pouring through your latest fact sheets. And you have an interesting mix of consumer stocks and chemicals as well. Let me ask you about consumer first and then chemical. I think Arvind Fashions is something that you own in your mid and small cap portfolio. And in the larger cap space, you have names like Varun Beverages. I can see Tata Consumer here as well. So again, tell us, this whole hope of the GST benefit, festive season coming and overall sales and earnings improving, where do you expect it to show up? And specifically for Arvind Fashion, the company has just gone through a management change with the Ms. Jain taking over. So, what is your rationale, your thesis, X of the overall macro tailwind that the sector may enjoy?
Yeah, so, since now we are a little bit talking about stock specific, please put disclaimer because we might be holding for our PMS, AIF, and our personal portfolio. So kindly please put disclaimer. These are not the recommendations. So particularly for a company which you are talking about, yes, recently there is change in management and we are yet to meet them because she is yet to join the company. But the overall thesis is in the consumerism. I strongly believe that discretionary is going to grow faster than the non-discretionary. So if you look at our portfolio, most of them are not into FMCG categories, but they are towards apparel segment, luggage segment, building material segment. So I think discretionary is going to grow faster, number one. Number two, if you look at the premiumization, entire consumer, if you look at the different verticals, the premiumization is going to be the more important growth driver, because the lower end of the demographic is the worst affected, and I think there is too much of competition at the lower end of the the value chain. Whereas at the upper end, for example, Polo or Tommy Hilfiger or such brands or CK brand, they are going to grow. They will keep growing it. And please remember, the per capita income inflection point has yet to come. So it is after probably another 1.5 to 2 years where actually hockey stick growth will start. So we are basically positioning our portfolio based on where we are going to see higher revenue growth and supported by better pricing power. So in a premium segment, you can have more pricing power compared to the lower end. And last but not least, where we see the significantly better profit growth. And therefore, our entire consumer space exposure is primarily focused towards the players who can benefit from that. Of course, the GST has been good news, and GST further adds to that with the names which you're talking about. And that can, to a certain extent, definitely can result into better demand growth.
Hi, Rajesh. Good to see you, Ben. What about tech? How are you all placed on tech? What are your preferences out there? Last, I think, couple of weeks or so, tech has actually outperformed. On good days, it tends to do relatively better. Yesterday, it had a big day as well. And on bad days, it's not falling that much. Do you think valuations have reached a level that you like it, or you want to avoid it?
I think probably the downside is limited, but the problem is the upside is also limited. So the valuation support comes from free cash flow yield for the large companies, and therefore they are not going down beyond a point. But at the same time, the macro environment is still not kind of a green signal. So we are also kind of more of a wait and watch more. But within the entire technology, we like the few companies where the revenue growth is at the top end and the earnings growth is also at the top end. So we prefer, again, there also to play the players like that. So we are more like a little bit underweight kind of a current portfolio weightage. I think there are many other sectors where the growth opportunities are going to be much stronger. Like, for example, capital goods still continue to do well. I think, select hospitals, most of these hospitals are now cash rich, most of them, and most of them, they are expanding rapidly. Many of these hospitals, in the first 6 months, they drag your profits. And then as they get maturity, they starts, getting added to the bottom lines. And therefore, you can see much bigger growth over the next 2-3 years for a few large hospitals, in the listed space. And similarly, CDMO is one such opportunity where at times there is a volatility because, the dispatches are kind of a, large lump sum kind of a quantities, and that results in the stock price volatility. But if you take a little bit longer view, CDMO also can be in a very good space to be in. So I think that interesting space, EMS, capital goods, in housing finance companies. Look at housing finance companies' growth, compared to the private sector banks. They are growing at 18, 20, 25%. So very healthy growth across the segments. So that's how I think we need to look at it to make a, what I would say, alpha for our investors.
Rajesh, you said, did I hear you right? Hospitals, you said?
Yeah.
Okay. Which name, just out of curiosity?
Would not like to specify the name, but the entire space looks very interesting. And in that, if you look at the top 5, top 6 hospitals chains,
okay,
the good thing which is happening is that most of these hospitals are now going the pan-India. So your risk to a particular region is also reducing across hospitals.
Yeah.
Be it number 1, number 2, number 3, number. Look at Mumbai. The South players are entering Mumbai, and the Mumbai players are entering North. So there is a geographic expansion, and that results into the de-risking of business. Correct. So I think it's a very interesting space to look at it. Good ROC, good cash machines, and a healthy growth environment. And macro, of course, is in your favor because our penetration is still one of the lowest compared to the many other countries.
And it's a good hedge against medical inflation, right? I think that is a must. Better than, I guess, buying. No, it's not. I'm just joking, but I'm saying that it's a serious consideration. Stocks have done extremely. Sorry, Rajesh, you're saying something?
Yeah, I think at times the more traffic congestion results into more hospital opportunities. So yesterday I met one company. He said instead of 6 kilometers, we are open to open within 5 kilometers because at times 1 kilometer takes 35 minutes.
Oh dear. Oh, absolutely. Especially in in Mumbai, sometimes it's ambulance is stuck and it's crazy, the roads and traffic, etc. There's a company, somebody mentioned, I don't know if you've looked at it, it's called GPT Healthcare, recent listing out of Kolkata. Again, it's a small company. Yeah.
We prefer the brands which are basically has a capability to scale across,
Okay.
That's the only way to leverage your brand.
Yeah. Absolutely. Got that. Rajesh, we'll leave it there. Thank you very much for joining us and interesting chat, as always, here on CNBC-TV18. Now, Hormuz is here with a spotlight on the top movers and shakers as well. Hormuz, tell us more.
Some sentiments have shifted in the broader markets towards the downside, but then there are some names that are bucking the trend today. Nava is one of them, and this 12-13% move at one point was up almost 17 to 18%. It's the biggest single-day gain since June of 22. Then we've already had more than a crore shares changing hands compared to a 20-day average of 5 lakh shares. This is the fourth straight month that the stock has delivered positive returns and has the potential to become the fifth straight year of positive annual returns as well. Now, this company called RACL GearTech is another one that is seeing double-digit moves today. Was up over 10%, now up 9%. Is the biggest single-day gain since December of 22. We have had 5 lakh shares changing hands today, a 20-day average of just 10,000. And Malabar India Fund and Ashoka India Trust both have stake in the company. Malabar India Fund has close to 6% stake here. And from the end of 2018, which was the stock is at 60 rupees, it made a high of 1120 in the month of May and currently trading at around 950. Now, BF Utilities is the other one, the biggest single day gain since August of 23. It's up in 3 out of the last 4 trading sessions today. And in this one single move, the stock has broken above all of its key moving averages, be it the 50, 100 or the 200-day moving average. But despite this move, the stock is still down 14% on a year-to-date basis. And lastly, KSOLs is the one that was at a 52-week low until last week and broke a 9-day losing streak yesterday, and it's building onto those gains now, 7.5% higher on the stock. 10 lakh shares changing hands compared to a 20-day average of just around 30,000. It's trading close to its 50-day moving average, around about 336, but still down almost by a third on a year-to-date basis, and a second straight year of negative returns for KSOLs India.
Okay, all right. Thanks a lot for that, Hormuz. Well, it's that time of the day when Nimesh joins us to tell us what is he picking up in D Street Chatter. Hey, Nimesh.
Hi, Nigel. It's relatively a quieter day, I would say. The Nifty looks strong, and that's because of the technical factors. We've been talking about it. FI is a net short, and there was a big resistance level, which we are above that. So that is helping the Nifty to do well. But from a broader market perspective, it's a quieter day, a bit of profit booking as well, I would say, and not much in terms of momentum. Even from a flow perspective, it's very, very muted is my sense, so not much activity from that side as well. I guess the sector which stands out for the last many days, apart from IT, but where there is a bit of short covering, the other sector is consumers, consumer and entire consumer basket. That's been doing well, and now with the announcement of the GST, it's going to be two segments of GST. So I guess that's where a bit of buying this seems to be there from domestic investors. So that's playing out in many of those consumer names. And as I said, 24 950 is a very strong resistance, and we are above that. So maybe if there is some good news from the global markets, some short covering may happen. But otherwise, it's been a relatively dull day with a bit of underperformance in the broader market.
Well, that's right. But from the broader markets, obviously, you have picked up some stocks where there is some so-called khabar or some news. Tell us, what's the news?
So the first stock on my list is Electra. That's been consolidating with a positive bias, but now there is a very strong sense of that company is likely to bag a very large order from one of the state governments very soon. So that's a trigger as far as Electra is concerned. The second stock is Varun Beverages. Relatively has underperformed, but I understand the selling pressure from some large FI seems to be largely getting over. And for the last couple of days, leading domestic mutual fund has started buying into Varun Beverages. So that's the second stock. The third is Paytm. That's been has seen a big outperformance in the last many weeks, and rightly so because of the regulatory approvals which have come through. Now the city is anticipating further corporate development as far as Paytm is concerned. And the last one is Kalyan Jewellers. Again, a stock which has relatively underperformed, and that's because of selling pressure, and looks like that selling seems to be largely over. A couple of large FIs were sellers there, and in the last couple of days, that's been cleaned out is the sense as far as flows are concerned.
Okay, got that. Thanks very much for that. An interesting list as always, Nimesh. By the way, I don't know if anyone noticed it or not, but one has started getting those updates from Paytm. I mean, if you didn't delete your Paytm app, asking for the wallet to be reloaded again, or the fact that there's no balance in the wallet, because of course regulatory, the whole scrutiny on them has been released, and the stock has done really well. Pull up year-to-date Paytm, 26%, one of the better performing stocks in an otherwise challenging year for the equity market. Well, on that note, let's take a very quick break. We'll come back with more in just a bit, and some final trading ideas coming up with the technical experts as well.
Welcome back. Dip below the 25,100 mark in the Nifty. The high today was 25,150, and now we're about 70 points off from that level. A little bit of that fall has come through in the last 30 minutes. But let's go across now to Nigel. He's at the F&O desk. Nigel.
Well, that's right. The 25,150, 25,170, that band has been getting rejected. And today's trading session, at least thrice I saw we went till that mark, and then in fact we did see some selling. The reason was that we're seeing aggressive writing at around the 25,150 call, because even though you were getting the direction right, you were not making money on the buying side. So that was telling you aggressive writing being seen on that level. Now, the 25,100 put as well, the premium was at around 80 rupees, which has come down substantially. So that's why, on the downside, we were marking all through the day the 25,020 to around 25,050 mark. So that was the important range. And going by how trading action is panning out, with just a few minutes to go with this expiry, we'll protect the 25,050 mark on the downside, and we won't cross the 25,150 level on the upside. Stocks that I'm looking at, BSE, just take a look at the open interest build up. Open interest is up close to around 20%. Massive open interest built up on that particular name. PG Electro Plus, the stock is bobbed up yet again. Now it seems the shorts are having some trouble, because those shorts in the system, well, they are gradually getting covered out. And if you look at it, even in today's trading session, massive open interest has come down. This is a probable stock that comes out of the F&O ban. So I'll keep an eye out on the file later today. And Titagar, well, it appeared it was going to come out of the F&O ban, but in the last 5 minutes that I checked, that it appears maybe in fact it could stay in for a day or so, because the unwinding hasn't happened to the extent possible. So PG Electroplus, stock to watch when you open up this evening's file, and Titagar could be on the bottom line. Back to you guys.
Thank you. Let's now go across to Ashish Khyal for a few BTST calls. Hi. Afternoon, Ashish.
Yes, hi, afternoon to you as well. And from the market, I think overall tone is on the buy side. We can clearly see that. And I think Swiggy can be a very good buy for a BTST because the stock is managing to break above its upper Bollinger Bands and also forming a very strong momentum candle. And peers have already touched a 52-week high, but I think Swiggy is yet to get there. And one can create long positions aiming for the target of around 470 on the upside. And on the downside, one can maintain a stop loss of around 420 for Swiggy. And the next stock that is going to be on the buy side as well from here on is going to be overall KPIT Tech. We can clearly see that the stock has been consolidating in a very broad range, but there is a possibility that we can see a positive traction from here on. We can expect the stock to touch the level of around 1250 on the upside. On the downside, one can maintain a stop loss of around 1190 levels.
Got that. In fact, the big mover today in the IT pack has been Hexaware Tech. Nuvama has written a note and they're basically saying this is it's the right size in the company. It offers growth and yet it's not very expensive. So it's cheaper than some of the high growth companies like a Persistent or Coforge, but it's growing much faster than the large cap IT companies. So in that sense, it's in a sweet spot, which is why Nuvama has put a target price of 950. But generally, mid-cap IT companies continue to see buying. Sign, Emphasis, Coforge in the green today and up nearly 5% this week. But let's talk about Aurobindo Pharma. That's in focus on the back of a likely acquisition. Ekta is here with the details. Ekta.
Well, yes, a couple of important takeaways from the Aurobindo interaction that we had earlier in the day was that the company did indicate that Zentiva does fit into the company's scheme of business. When talking about whether or not $5 to $5.5 billion would be a stretch in terms of the size of the acquisition, the company did say that leverage is not a major issue for them and they are generating around $100 million in terms of cash every quarter and in fact have $140 million of net cash on their books, and the cash is only expected to grow. Bankers, in fact, according to them, are happy with their balance sheet and hence they do not see leverage as a big block when it comes to this kind of size of an acquisition. What is guiding them would be three guiding principles for a particular acquisition despite the size, etc. And that would be the EV to EBITDA multiple should possibly be in single digits, EPS accretion as well as synergies. Now, a couple of other important key points from the interview was the Eugia Plant 3, which is an important plant for the company and is under the US FDA scanner. They've invited the US FDA for a re-inspection. The US facility that they have, they are expecting supplies to possibly begin Q2, Q3 onwards, again, based on what the regulatory milestones would be for that particular facility. And lastly, Q3 is expected to be good for the company in terms of their Pen-G facility, which is expected to scale up.
Thank you. In fact, let's hear out the Aurobindo Pharma CFO.
Given the clarification to the stock exchange yesterday, it's in the too premature stage and it's very difficult to talk about it. Having said that, we are a global company having major presence in US and Europe, and certainly this asset being placed in Europe, it does fit into our scheme of things. Today, as on date, there is no leverage at all, and we are having an overall cash of around 140, and certainly this cash is expected to go up, and any acquisition will look into the multiples, EBITDA multiples, and whether it is a EPS accretive or whether synergies are there. All these factors we'll take into account, and then we will do that.
Okay, so that's as far as Aurobindo is concerned. Stock in the news last couple of days. Market is okay, it's steady, but it's the mid-cap screen, which is not inspiring too much confidence today. 0.5% lower on the mid-cap index. Check out some stocks. Nifty also in a range. As of now, the lower end of that range is not broken, but the mid-cap index is at the day's low. Dabur, some more names that are seeing additional selling. Dabur is coming up, 3.5% lower. MCX, along with the equity market infrastructure institutions, MCX is also down about 4%. So these are some of the additional names which are weak. JK Cement is down 5.5%. So some names on the mid-cap side which are flashing some red. Okay, let's now get to Vivek. Vivek tells us that there is a Nifty regime that seems to be on the corner, and maybe the announcements are made as early as tomorrow itself. Vivek, what are the expectations?
Well, that's right. So the NSE Index Subcommittee will meet tomorrow. August 22nd is when that particular meeting will happen. There will be a whole raft of changes that are expected across all of the NSE indices. The index that we track closely, of course, is the Nifty 50, given the fact that there will be significant amount of tracking that happens in terms of passive funds. Now, what we understand from various brokers that we went ahead and polled is that this time around, they're expecting two major changes to happen as far as the Nifty is concerned. So, two inclusions at the expense of two exclusions. So, which are the likely candidates that could get into the Nifty this particular time? Max Healthcare, expect inflows of close to $400 million in this particular name if it comes in. Indigo, that is Interglobe Aviation, that particular stock could see inflows of close to $600 million. And they could come in at the expense of one stock, which has been a significant underperformer, clearly IndusInd Bank, almost $230 million of outflow. And also Hero Moto could be one stock that makes its way out of the Nifty. Close to $300 million of outflow as far as Hero Moto, in case these, these predictions or these expectations from analysts do come about. So the Nifty, come October, will see a new look.
Okay, all right. Thanks very much for that, Vivek. Some changes which are afoot. By the way, there is a MSCI rejig as well, but I think that's a little down the line, about a month from now, but that's going to be a big one as well. Already some projections, etc., about what may be in, out, and the thing with, of course, all this is, pre-positioning, etc., starts very early, and it undergoes a few rounds. I mean, names are announced and effective so-and-so date, so a fair bit of action already takes place before some of these big changes at least are done. I just want to play out some sound bites for you. Divestment Secretary Arunesh Chawla spoke with CNBC-TV18's Yash Jain and spoke on a number of issues, including the government's planned stake sale in LIC. It's a story we had reported. We had reported that LIC is essentially going to embark on roadshows for its divestment. And the long-pending IDBI-backed divestment also is something that he spoke about. Listen in.
As per our commitment, we are committed to sharing the wealth of our large financial institutions, particularly the ones that are listed with ordinary shareholders. We are also making progress to achieve the public listing norms, which are set by our regulator, which is SEBI. And we have done our, as you know, the RFP came out in public domain about 4 months ago. We have completed the entire RFP process, and transaction-specific details, I'm sorry, cannot be given at this time, because all the rumors that float around do not help any one of us. The transactions are designed by market research, and they are confidential at the moment. And at the right time, we'll make the right announcements.
Okay.
The EOI part of the process has been fully completed. The qualified parties who qualified it technically have been through a provisional fit and proper assessment by the Reserve Bank of India. And they are now doing the due diligence, and through the data room, all details, data, documents have been made available. We are in an advanced stage of completing the due diligence exercise.
Okay.
And the further steps, which is essentially the RFP stage. We hope to be able to complete that process by the end of the financial year. Defense, as you know, is a strategic sector, but as per our composite policy, even in strategic sectors, we want to share the wealth of the public enterprises with citizens. And we have also taken a conscious decision to list several of PSUs in the defense sector. And this has paid dividends because their performance has become market-oriented. They are subject to the market discipline. Their valuations are also very good. And we have minimum public shareholding norms for the defense enterprises who are listed. And we will be making progress on that in due course.
Welcome back. Well, the markets actually are going to be ending closer to the lower end of today's range. The only good news is the number of stocks advancing are more than the number of stocks that are declining. And actually, in the last few minutes, large revenue tech, I think we should pull the intraday chart out there. The stock was down close to 3%, 2% approximately at the start of the SAR. In the last 10 minutes, it's a big upsurge that we're seeing on large revenue tech. The other one is travel food services. That stock had listed, very tepid listing. But the stock actually has pulled back close to 15% from the lows. And the other one is Genius Power. So all these three stocks actually from the broader markets have just moved to the high point of the day. Amrish Balika is with us though. Amrish, I just named a few stocks. You have a pick for us today?
There's one pick which is from the pharma space, Gland Pharma. It's one of the largest and fastest growing injectables manufacturing company with global footprint across 60 countries. Huge range across sterile injectables, oncology injectables, and ophthalmic injectables. Q1 earnings were decent. EBITDA margins at 35%. They grew about 39% Y-on-Y. PAT improved nearly 50% Y-on-Y. The cartridge capacity is being increased from about 40 million units to about 140 million units by next year. So this should actually improve the top line quite a lot over the next 2 to 3 years. Our net cash position is about 3,000 crores, which is about close to 9% of market cap. And Zenzi, which they had acquired in 2022, that's shown an extremely good turnaround because in Q1, there was an EBITDA break-even. Their gross margins was 80%. Expected consolidated EPS for FY27 is around 72. And based on this, my target price is about 2,400.
Amrish, hi, afternoon. Clean Science saw some big sharp swings. The story wasn't that the promoter sold 24%, but that there was this freak trade, fat finger. What happens from here on? How do you expect this episode to play out?
The earnings were quite decent, but along with that was this news of promoters trying to sell a decent amount of stake. And I think that was an overhang for a while on this stock. And today, in fact, with this getting over, I think, we have seen at least the bottom for the stock, at least for the time being. I think at the current levels, it makes a lot of sense looking at the sort of a growth which they're talking of going ahead and the sort of earnings which we have seen. I think at the current levels, it makes a lot of sense buying.
Okay, so that's a buy for Clean Science. Amrish, hi, afternoon. Ola, electric or not, I don't know, because a very interesting trading action on the stock last 2 days, right? Huge volumes yesterday, massive move. Very big volumes actually even today. Very, very big volumes on Ola, but the stock's down now 8%, undoing half of the recent gains. Your thoughts?
Ola Electric post the IPO. The IPO wasn't that great. Listing wasn't too great. But then after that, we saw levels of closer to 150. And from that 150, we saw a one-way down till about 40 levels, where we saw a lot of consolidation. And this again happened for a reason. There was a decent amount of adverse publicity. And there was a reason also because, they had a great sector going for them. They had a first mover advantage, but they lost out because of the sort of complaints which were there from the customers, the compliance issues which were there. Additionally, they lost a number of senior, executives, from the company. But now it seems that the promoter seems to be wanting to put the house in order. I think the Gigafactory is in place right now. And that's, I think, an important element in this whole thing. And the new launches which they've done, the S2 series, I believe they are much better. There are much lower complaints. And I think, like I said, they should be putting their house in order, maybe taking care of their employees, getting the compliance in place, without really looking at shortcuts. And if all this falls in place, which is what is expected right now, I think they should be back in the reckoning. So because of which we saw that move from 40 to closer to 55 levels. And that was in such a short time. So it's quite natural that there'll be some amount of profit booking happening. That's exactly what we're seeing right now.
Plus, the other news was that Vahan data shows that so far in the month of August, the registrations for Ola Electric are less than that of Ather Energy. So Ather Energy may overtake Ola Electric if this trend continues. So that added, to the profit booking sentiment. But all in all, closing apps pretty much flat, Prashant. After touching 25,150, we're closing with a modest gain.
Just 24 points, right? But still 6 days in a row in the green. So that's the scorecard by the end of it. Nifty Bank actually ending slightly higher, and mid caps and small caps were kind of flattish.